Hello, everyone. Welcome to Smart Investing. I'm Albert, and it is March 18th, Friday, 3 o'clock p.m. And this video is going to be about the banking services sector. I will be doing about 10 stocks. Again, not all these stocks are going to be in the banking services sector. Most likely they will be, but there might be one or two also in the lineup when I'm going over the stocks in a similar sector. And the similar sector that's been going on for the past few videos and before that, it's been the consumer lending. So about that real quick is the consumer lending is it's like a smaller kind of loan, and for the banking services it could be a really large loan. Like for example, it could be more than $5,000 or more than $10,000. I'm not a bank, but I'm not too sure how that works. Again, with the banks, they look at your credit score. They want to see if you can pay the loan and stuff like that and all that. As for a non-bank, like a credit union or like a Western Union, or I don't know, whatever kind of lending facilities there are out there, they have different requirements. And again, they do smaller loans. And I'm sure they charge a higher percentage on interest. So anyways, I just thought I'd throw that out there. So again, I'm going to be going over 10 stocks. I'm going to be using Webull, and let's begin with the first stock. The first stock that I have is, let's see here, it was OMF. So we have OMF. As we can see here, I am going over the numbers. So they have good earnings. So long term, they seem pretty good. Short term, they seem okay for short term. So as we can see here, OMF, they are called One Main Holdings Inc. Let's look at the 1 year. They've been going down for the most part all the way from about here. So in October, and we are in March. So they've been on a downtrend. It's been flat ever since about November. It's gone down, then it's gone up again. But then as you can see here, after February, you can say, so this line here, we can say fairly around this line, it hasn't broke. And we can say fairly around this line, it hasn't broke. So now we have this line here, so it has gone down. So that's the 1 year mark. So now let's look at the company. And let's read the profile. So again, this is a consumer lending. And they do have the website OMF. They offer optional credit insurance. It says life insurance. I'm just reading this here, disability insurance. So they have a multitude of different, loan and insurance policies. So they seem like a good company. Let's look at the dividends. So this is a company that does offer special dividends. Actually, this was actually in my long-term portfolio that I just updated around in January. I think I might throw the link in there in the description. So this is definitely a good company. They have raising dividends and they offer special dividends. This is definitely a company you want to add onto your watch list. They have no splits, which is good. So again, raising dividends, quarterly dividends and special dividends. This is one of those rare stocks that you barely find that are doing good, that are not value traps. You know, they're actually valuable and they give you bonuses. There are not a lot of companies that are like that. And if you do find special, well, I'll go over that towards the end of the month, the special dividend paying companies. But also, it's rare and it's very, very hard to find companies that pay the rising dividends on top of the special paying dividends. It's just a lot of money for a lot of companies that need to, adjust their balance sheet, and it's just a lot of money on their end to provide all that money being given out. But it's rare, and these are one of the companies that actually do that. They give you the raise and the bonuses. So we have a nice cash flow that's been going up. Let me see something and just do the estimates. So we have here about 4. The cash flow about 4. So they're down at least $1.5 billion in cash flow. What do they have in net income? So they have that in net income. So I said $1.5 billion. So they have it in net income. So my guess is, and this is good that I have 2021 results. And obviously I like the yearly results. That way I can get a better understanding. So in order to come up with better increases and to cover the dividend, they will have to raise their margins and prices a little bit more just to have a bit of cash flow. It looks like they're down on cash flow. They're in the negative. But again, the reason being is because they're pretty much doing them bonuses and the dividends. So I'm sure that they're going to charge people more on the interest rates. Their revenue has gone down from 2020 to 2021, as we can see here. But then for the past 3 years before that, 2017 and 2019, it's been doing fairly well. But again, I would have to consider in 2020, that was pretty much a bad year for a lot of people because of the pandemic and all. So I just thought I'd get into that and show you the margins. The margins look really good for 2021. See, and this is what sucks about it, because it's like the companies need people to spend, but then people and other, financial and smaller businesses and stuff like that, it's just harder for them to make payments because the cost of everything is going up. But then the thing is that guess who's gonna pay all those costs? Which is the consumer. So pretty much everything relies on us. We're the ones paying for everything, which I would say, in my opinion, it's really not fair. But it all just depends on the consumer. If we're spending and spending and spending, especially on stuff we don't need and not necessarily needs and just wants, then there's no reason to even think that everything is gonna be fine. It's just tough. I think we're in a tough market. I mean, the stock market could go up, a little bit more, but I can clearly see the inflation on everything. Everything keeps going up. We're in crisis and everything, and again, the stock market, in my opinion, is not a reflection of the real economy. Again, in 2020, should have went down, and things just after 2 months gone up. I think the same thing is going to happen in 2020 for a little bit until we get a real crash. It looks like the stock market went up like crazy this week. It went over like 7% this week, which is nuts. They're saying these are estimates better than November of 2020, which is kind of scary. And there was no that much inflation in 2020. So buckle up your seatbelts because it's going to be a bumpy ride. And prices are only going to get worse. And the banks, I don't know what banks are really going to consider. I mean, obviously they're going to keep lending, but what I mean is, I don't know if banks are going to be greedy and make loans for houses. And if they do, we're really going to see a 2008 repeat. If not, then, anything goes. So, enough of that. Let me just continue with the stocks for the banking services sector. So, yeah, OMF, it seems like a good company, but again, it's tricky because, again, you don't know how many loans a person is going to take out or wants to take out. So with rising prices, it's just gonna put a strain on the consumer. So we have here the next one, GCBC, Greene. Is this Century or County Bancorp? I'll look at the name correctly in a minute. I like what I see for the long term. As you can see, they've gone up this whole year. You can see that clearly. GCBC is the ticker symbol. Now let's look at the 5-year. So they've gone down from 2018 all the way to 2020. Then they went straight up. So they pretty much broke even around 2022. And that only shows that banks have been doing pretty good. Well, not all banks, but some banks. So this date was around, let's look at the date here when it broke out. So this was recently. Let's look at the last 3 months. So this is definitely a stock that is cheap. They're doing good. Short term, I see it going up. Slowly but surely. And let's see here. Let's look at 2021 returns and all that. So they've been doing good. For the long term, they seem pretty good. Let's look at the financial details. I don't have no net margins for this one. And again, it's crazy because on this website and stuff on paper, it shows that it's a good company. But some companies, they might actually, I mean, you just have to go to the website. They might actually be a little bit less consistent in what they say they are. So what I'm saying is usually the numbers are accurate. So we have here the operating cash flow. So it looks like they have good operating cash flow. I think that's what it is. But again, what I'm saying is, nobody knows what's gonna happen. That's obvious. But banks are gonna do well. I think the financials for a downtrending market. But the thing is that how well are they gonna perform? Some banks might even default and might not have cash flow depending on what kind of loans they do. Some people might even not even pay their loans. That's another thing you gotta watch out for as well. It just all depends, you just don't know. People might lend you money and not even pay. So what I'm saying is that's the bad side of things too. You got to look at things in a good scenario and a bad scenario. So when these banks make money, yeah, they might have good and low interest and a good monthly option, but how would you know if that consumer is actually going to pay? So really, it all depends on the consumer. And then in 2008, they had a few banks go bankrupt, and then also you have a bunch of banks, and the ones that are on top, they like making acquisitions. So in a way, that's a good thing, but then it sucks for the other bank that goes under. So long term, I'm not gonna say long term for this one. Let's look at the dividends. They do pay rising dividends. They did have a split in 2016. So this stock seems okay. They have a market cap of 400 million, 52-week high and low. Sorry about that. I didn't mean to do that. Of about $24 difference. So not too sure about that. PE of 14, close to 15. That's like normal price right now. So they seem okay. This stock seems like okay for the short term. Next up, I have TSBK. Hold on, let me just see something. Sorry, guys. Let me just read about it. So, Greene County's Bancorp. So, they're a community bank. Where are they located? If anybody knows or has heard of this bank. Okay, so it shows that they're in the region. They're in New York. Capital District, Hudson Valley of New York. So there you have it. Next up that I have is TSBK, Timberland Bancorp. Oh, they have no volume. I'd stay away from this stock. But again, I could be wrong. I don't see no kind of volume. Look how choppy that is. Ugh, I stay away from this stock short term. But again, I'm still gonna go over the company as well. The 52-week low and high is awful, and realistically, this might be a good bank. I'm not trying to defend them or anything, but I'm just saying like the stock market is very tricky right now because on the stock market, they might look like a bad bank, and they have a 52-week high of 30 and a 52-week low of 26. So for the year, a difference of $4. But then in actuality, people are just not interested in the stock, but they might even be a good bank. So to determine that, you just have to look at the financials and see the consistency in that. So they're market cap. So they're a very small bank. You can see here 235 million. That's very, very risky, but it seems as if they are going up in revenue and earnings. So they seem okay. Their debt is lower than many other companies that I've seen so far. Now let's look at, do they pay dividends? Okay, they do. Now do they pay rising dividends? So they have been paying special dividends. Another company that has been paying special dividends. So it looks like they started in 2017. But the reason I say I'd stay away from this company, so they cut the dividend in 2020, but it's just not enough interest. Not a lot of people are interested in this stock. If you see the volume, there's not a lot of people buying this stock, even though they're providing a special dividend and stuff. Just not a lot of people are interested in it. So, I like the stock, but I guess a lot of other people don't like it or not interested in it, never heard of it, are not paying attention to it. So it has like no uh interest at all. That's all it is. And when I mean interest, I mean like I mean people just they don't like it. It's just like unheard of. That's all. Uh it's either like or dislike the stock. So I mean interest as in, like, is the evaluation attractive, and is the stock attractive? But people, they don't like it. Seems to be overlooked. These are one of these overlooked stocks. So hopefully people hear this stock, and hopefully it goes up in the long run. Next up, SBFG. So SBFG. So we have here very choppy stock. Volume of 179K. So it's pretty active. Which is good. Looks like it's PE of 7.5, so it's undervalued right now. Another small stock of 138 million. 52-week high, 52-week low of 16, high of 21, 17, 18, 19, 20, 21. So a difference of $5. We have here the company. We could look at the chart a little bit again. 5-year, pretty flat, which is still not bad. It needs to break out. It needs more likes for this stock. Everything is like or dislike, so it needs more likes and needs more investment. Pressure in there, buying pressure. So SB Financial Group, they are a bank. Let's look at the profile for a little bit. I just like to see where they do business. Because usually if it's close to a major city or even a minor city or a suburb, or if it's rural, it's harder for a bank to make that's just my opinion. I mean, I could be wrong. I think more people are moving out of bigger cities. But yeah, again, the bank just wants to get known. So we have, it doesn't say where. I'm not gonna go on the website, so I'm just gonna take my chances and not look at it. This is a U.S. bank, but again, I'm sorry, I can't tell you where. They do seem to be giving rising dividends, which is not bad. Do they have any splits? And no. So let's look at the financials real quick. Let's look at the annual reports. So we have here they're growing in revenue and net income. Earnings per share are decent. Debt is okay. So apparently, sorry, I was looking at the wrong criteria. So we have here, they're growing their revenue. They're slightly growing their take-home pay, as I like to call it, their net income. Uh, that's definitely a good sign. Let's look at their cash flow real quick. The cash flow went down for operating. So we have 63 and 17. So we have about 90. So they have some cash. Not bad. They have some cash on the sidelines. And they just have to worry about their earnings right here. They've beaten earnings, but with Wall Street, you never know. It might be earnings, but then the stock might go down. It's just very weird like that. And I think it just depends on the overall market that day. You might have bad earnings and miss estimates, but if it's a good day for the stock market, the price might even go up. It's just very like tricky like that. That's why like since 2020, everything's just been volatile. The earnings reports and um the uncertainty as they call it. So yeah, very tricky these past few years until I'm just waiting really for more inflation until everything pretty much uh when crap hits the fan, as they say, that's what I'm waiting for. So they could keep jacking up the prices. I know people are gonna have to tighten up on expenses. I'm sure I'm not the only one that's gonna do that. People are feeling the pinch. I'm just a regular consumer, just like everybody else. Um, I just can't spend as much as I can anywhere. Prices are going up, gas is going up, all the necessities are going up. So, I'm sure people are in the same situation as everybody else. Um, everything keeps going up, and it's just nuts. So, I don't know where this company is. So they seem like they're doing okay. Wall Street doesn't like them as of yet. There's no likes for this stock. They're not invested in it, and a price difference of $5. So again, this company, they're doing okay, but they're just flat. So I'm gonna say no. There's no interest. There's no attraction to this stock. So next up, SYBT, Stockyard's Bancorp. I don't even know how to say that. What to say? So we have here. So they are in Louisville, Kentucky, and okay. So retirement services. I like what they have to offer as their services. They do trust and estate services. That's pretty cool. Now, let's look at the dividends. Rising dividends. That's good. Last split was in 2016. Let's look at the financials. Volume. Oh, gosh. There's some activity, but there needs to be a little bit more than that. Needs to be more than that. So we have here, what do we have for their margins? I don't have anything. But again, the most important that I can look at, that I can see right now, that what usually I tend to look at the income and the revenue and the operating income. Well, that's going up. I have nothing for operating income, so let's look at cash flow. They have pretty good cash flow. Strange how these smaller market cap banks, they have decent cash flow, and then I see for the majority though, bigger banks, they run like on a negative cash flow. It's almost as if they're gambling on the consumer to, it's like they're very reliant on the consumer to pay more. So anyhow, we have here the rising dividends, they're doing okay. 52-week high and low, so that's not bad compared to the stocks that I have reviewed. Even in this past few minutes, there's always been maybe $5 to $10. Now you see a difference of, we have here at least $20. So we're looking at about 22, rounding it off. I'm not even gonna do the math in my head exactly, but I'm a guesstimate of about $22 difference for the 52-week high and low. So we have a PE of 18.3. So slightly overpriced. Let's look at the chart. It has gone down so it's gone down. It's gone down here, and then it's starting to go up again. So we have that V. It's like a really wide V. It's not like your standard V like that. It's like a really wide V. Very, very wide. It's gone up the past month, and like any other stock has been going up. For the long term, it seems okay. If you want to add this to the watch list, I guess you may if you want to. They're a $1.44 billion company. They just need more activity. They're not that active. So again, that stock is okay. They just need to be more active. Next up I have is Luther Burbank, which is LBC. We have volume is okay. I'm not too fond of it. 52-week low and high. Not a lot of activity. So that means to tell me not many people are interested in the stock. Very undervalued as of right now. We have a PE of 8. So basically it's at a discount. It is at a cheap value. Dividend is at 3.54. Now before we do that, let's see the chart. Not bad. But again, a difference of about $5 for the 52-week high and low. So let's look at the company. Where are they located? What are they doing exactly? So they are in the West Coast. I saw right away the West Coast. Located in Cali. So, okay. Okay. Let's look at the dividends. So are they paying a rising dividend? For the most part, not really. As we can see here from 2018 to 19, barely nothing. Then you have 2019 to 2020. Same thing, 2020 to 2021. So they just recently did a raise. Did I see 2022 somewhere? Here we go. So we see here 2021 was 12 cents, but then in 2022, same thing was 12 cents. So right here is when they did a raise. So again, for the most part, they're not really giving good raises. I like my annual raises. I'm going to say no to look out for you guys. There's not a lot of activity on this one. Hopefully in the future, this may do better. And hopefully, I mean, it does have potential. We have a $700 million market cap. Hopefully it does better in the future and it has more activity. Next up I have is SFBS, Service First Bank shares. I like the chart. That's a really strong chart. Look at the prices, that price action. So we have a price action going on. It's definitely over $20. So 52-week high and low of. That shows a lot of activity. If you see the difference between the 52-week low and high. So that's at least $30 off the bat, right off of the bat. So we have here sort of overvalued. We have the PE at 23.99 to be exact. Slightly overvalued. But again, the chart is doing pretty good. Now, let's look at the company. Where are they located at? So, they have a bunch of states here. Right away, I saw Alabama, Florida, Nashville, Tennessee, Atlanta, Georgia, South Carolina. So, this is in the South. So, they have multiple sites in multiple states. That's very good. Market cap is at 4.96 billion. So they're a small cap company. They're not a micro cap, but they're a small cap. Again, from the 52-week low and the 52-week high, they have plenty of activity for this year. I would say yes to this stock as a watch list. As you can see, rising dividends yearly. Not bad. And do they have any splits? The last time was in 2016, 2-for-1. So I would say it's a nice watch list stock. Definitely nice to watch list it. Next up is MOFG, Midwestone. We have a volume of 30K. Some activity could be better. Market cap, 512 million. 52-week high and low, not even $10. Showing that it's undervalued. So I'm on the fence about it. It's hard to say yes or no, or does it even have potential, which is a maybe. Let's look at the chart then. It looks pretty. If I was to draw a line from this point on, very choppy. But for the most part, it looks like it's been flat, but more on the positive side than the negative side. So let's look at the company real quick. Where are they located? I'm thinking in the Midwest. I mean, that's obvious in the Midwest. But what states exactly in the Midwest? It might be 2 states, 3 states. That's something that might have to be more investigated upon in the website, I bet. So they do online banking, mobile banking, credit and debit cards. They use Zelly. So bank has been around since 1983. So let's look at dividends. Rising dividends, yes. They've been paying rising dividends. That's what it looks like. So we have here the financials real quick. Since I'm gonna say no. There's not too much interest, just some interest, not enough to push the stock up where it wants to be. Again, it has potential, but there's just no activity. There's no interest that a lot of people want to participate in for this stock. So I'm going to say no for the short term and long term. And the earnings are pretty decent. The earnings, looking at the numbers, pretty decent. So next up I have is PCB. And we are almost done here. I like the chart, but what is the price action? So we have about 14 and 26, a little bit above $10. They're undervalued, very cheap stock. Not a lot of activity though. Not a lot of activity. Not a lot. So we have, where are they located at? PCB. New Jersey. So this is the Northeast. New York. They also say, and I see here, LA, Virginia, Chicago, Washington, Colorado, Texas. Major cities, I would suppose, just from the information that I'm gathering. The rising dividends seem pretty good. They have any splits? No splits. Let's look at the financials. They are doing okay. They are doing okay. So again, there's just not a lot of activity for this stock. They might have good numbers, but that's all it is. That's all it is. People just have to be interested in the stock. That's all. Popularity contest, as I say. But again, it's good. Sometimes for me, I think it's kind of cool to find stocks that nobody really hears of because of you get to buy more shares, which is what I like to do. And again, you might find stocks that are just way better than what you have on your watch list or what other people are saying or what other people recommend. And, you just want to compare what stocks are good and what's not. So again, that's the information that I try to provide for you guys. So again, at the end of the month, I'm going to provide the special dividend paying companies. See which ones are good, see which ones are bad, see which ones are worthwhile or that have potential or not. So anyhow, that's going to come up soon. So let me just finish up this video and finish these two stocks. So for this stock, PCB, I'm going to say no. There's not a lot of activity. Hopefully there can be more activity. If you guys really don't mind really slow growth, I mean, this might be the stock for you. I mean, who am I to say? But who knows if you like really, really slow growth. Some of these companies may be good for you. So let me look at the earnings. So they have been beating earnings. They beat earnings. Sometimes this is inaccurate. Sometimes that's inaccurate. These numbers, I don't know why. And then it's for not every single stock. I mean, there's times where it can be inaccurate. I don't know if it's because of they do maintenance while the app is still open or what. But I compare it to other sites, and I don't know which side is right and which side is wrong. But I don't know. I just have to compare and contrast when it comes to the estimates and the actual results for the earnings reports. So anyhow, let me deep dive into this again. So the cash flow, they seem to have decent cash flow. Net income seems to be okay. And the thing is, too, guys, you don't want to have like 200 stocks on your watch list, which I know I say watch this, watch this, watch list. But again, it just depends on your investment style. If you like slow growth, uh, it doesn't hurt to look at the companies that I actually say that are good and the ones that are bad. And again, some bad companies might be better potentially in the future. Because it's just a matter of the participation rate, as I like to say, because it's not a hot stock at the moment. But again, if you're just, depending on your investment style, whether you want value, you know, income or growth, then each stock is, different to your style. So we have here, again, I'm going to say no. Again, no participation rate, as I like to call it. It's just not popular. So the last one, and I'm going to let you guys go. I have here, this is a beaten down stock. I love to see this. I know people love to see this. Very, very beaten down stock. Very, very active. Very, very active. Very, very active. This is over 8 million. Very cheap stock. Definitely add to the watch list. I know it sucks to see this, but I know how Wall Street works. In the short term, this stock may potentially be in the running for big gains. We have here 52-week high, 52-week low. 52-week high is 13, 52-week low about 7. That's not even a $10 difference. So, what is the PE? It's not showing me. But the future forecast of this PE is about 8.7. Round it up, give it 9. It's still pretty undervalued, even for the future forecast. So average volume for this stock is 9.92. So very, very active, extremely active. This is a $20 billion company. So this is not like a micro cap company. This is almost like a mid cap company. They must be doing something right. Because if it's a market cap that big, but the price is that low, let's dig a little deeper, guys. Now, if that's the 1 year, let me see the 5 years. So they've been going down even in 2020. So what this leads me to believe, now let's see this. I see this point here. That's a really important point. Come on, where's my drawing board? Right there. I see there. And I see there. So now let's draw the line again for the 1 year. So what price was that at 2020? That was a low of about, I have 678. So we have here, I had 678. So this price is about 688, only a 10 cents difference. And this stock seems pretty good right about now. So in 2020, if it jumped, to 678. Next barrier to break was about 830. About 833. So this did break out. It's reaching about 833 slightly. So yeah, I see gains, but I just don't see a lot of gains unless they had a lot of splits, which is what made the price so low for that market cap size. I gotta pay attention to my phone because it's almost gonna die. But anyways, we have here bouncing off the close to $7 mark. Now let's dig deeper. Let's look at the analysis. They say it's gonna underperform, but it's still highly active. Now let's look at their annual report. They are in the negative for 2021. So did they make some kind of big purchase or what? You have negative earnings. This is super rare to see. And they have more debt than their peers. So something fishy is going on with this stock. I'm sure they had a split. I'm not even going to look at the... Wow, they don't have no splits. They pay once a year for dividends. You see in 2021. And the dividends are random. As you can see here, they're very, very random. They're not going up. They don't do decreases, increases. They just manage this. I like yearly management for the dividends, especially for a newer company, and then they slowly go to the quarterly. But again, this company has been doing this for almost 10 years. So I would assume sooner or later they should start. That's just my opinion. I would think that they would do quarterly dividends to manage their money better. This company is highly active. It's just tricky because it's highly active, but they're negative on earnings. You don't really want to see a bank that is not profitable. That's just plain awful. You really don't want to see that. So for the short term, it looks like a yes, but for the long term, a definite no. So question is, for short term, how long or what would it seem as a decent time frame that the stock would go up? So we look at a price difference of the 5-year. So it had to break barriers of about here. So guys, we're looking at close to, like, I would say on the safe side, and to be pretty safe and good, make some decent money, I'd say up to the $10 range. So if it's $8.15 now, because we only have like 5 minutes left in the stock market, you're looking at about a little bit more than $1, a little bit less than $2, $1.50 could probably make, if you know how to day trade. Though again, day trading is risky. I'm not recommending that to anybody. But if you like to swing trade or day trade, this may be a potential stock. Again, disclaimer: the stock market carries risk and reward. So consult a financial advisor. I am not a financial advisor because I'm not licensed or insured. So if you're going to invest in the stock market or trade in the stock market while it is with the open market with open hours, please consult a licensed professional. So thank you guys for watching. I will see you guys in the next one, continuing the banking services sector. I hope to finish this sector because there are a lot of banks out there. And I hope you guys enjoyed the video. Like, subscribe, or comment. Any feedback will be welcomed. If not, I'll try to think of something new. Again, coming up soon, I'm going to be doing the special dividends. So thank you guys for watching. I will see you guys in the next one.